Wait, what? I can do that? This is Eric Bell with Wait, what? Financial matters that matter per business and the people that own them. Welcome to this episode of Wait, What? I'm fortunate today to have Everett Sands with me. He's CEO of Lendistry here in Orange County. His past experience includes both national and community banking. He's on several and various committees, including commercial lending, compliance and risk, leadership. He's had over 200 sales professionals reporting to him at time, serves on several boards for a community bank, and he also has his bachelor's from the University of Pennsylvania. Thanks for being with us, Everett.
Thank you. Thanks for the opportunity.
I was just looking at, when you look at the current lending environment right now, is there anything that you can tell me in terms of what you're seeing out there for the small business owner?
Yeah. So today what we're seeing is banks moving away from smaller loans, mainly due to operational efficiency. And that's going to present some unique, I would say, challenges to the small businesses and also opportunities for others, as there's always been an underserved group of small business owners who weren't able to get bank financing or traditional financing. Usually that depended on credit profiles or possibly on location or maybe revenue size, net income, different things like that. Now, if loan amount comes into the equation, that's going to be pretty interesting. And what I mean by that is you could have an 800 credit score, you could have perfect cash flow, but you might be asking for a loan amount that a bank doesn't do. Let's say a number like $300,000. And if the bank's minimum loan amount is $1 million, you're going to get declined, not because of your credit profile or not because some of the normal things that you would be looking out for or you might prepare for as a business owner, but simply because it's just not operationally efficient for that bank to do that loan. And naturally, there's not going to be any signs when you walk into the bank or when you call the bank to say this is our minimum loan amount. That's going to be pretty interesting to see how this plays out over the next 5 to 10 years.
So you're saying some banks would let you go through the whole process, decline you, but not tell you up front that 300,000's below our minimum of $1 million?
Yeah, I mean, I'm not saying that this is the good bankers out here, the good relationship managers who obviously know their job very well.
Right.
But sometimes you're in an automated process, and sometimes you're going to be in a systemic process that where someone doesn't tell you, and so you might have provided a lot of documentation, you might have went through a lot of different things, and from the business owner, time is money, right? So whether it's 1 minute or 1 week, that time was very valuable that was spent, moving forward on a process that they couldn't have been approved from the very beginning.
So, a lot of regulation has been put around the lending industry since 2008 and 2009. How do you see lending playing out over the next 5 years?
Yeah, I think the regulation has done the opposite of what it was designed to do. I mean, if you think about the way, at least that it was marketed to us, it was too big to fail and preventing too big to fail. Now it looks like we're more like our neighbors to the north or south or in Asia, where we're getting a smaller number of banks. And so if you think about it, banks used to be an entrepreneurial endeavor, right? You take the state of California, there have been 2 bank charters approved in the last 7 years. Both of those banks have now merged into other banks. So the net number is 0. And I think what's interesting about that from a customer perspective is that means that we're going to have to get in line, so to speak. And then I say us as a small business owners going to have to get in line, and we're going to have to be able to beat to the drum of, a handful of banks as opposed to having a multiple choices. And I think that's going to be interesting. It's going to play out that way. I think American Banker is estimating roughly about 400 mergers and acquisitions per year for the next 5 years. And so again, the selection and number of banks is going to get small. I would also say, in addition to your question, it's just not profitable to be a bank under 10 billion. So there's a lot of banks out there that were under 10 billion. To give you an example, in 2008, there were 11,000 banks that were $100 million and below. Now there's less than 1,000.
Wow.
Those 11,000 banks represented 70% of small business lending in the United States.
Wow, that's a big decline.
Yep.
Everett, there's a lot of small business owners that we talk to that are listening in, or medium-sized businesses also. What would you suggest to them in terms of how they should move forward in terms of looking for financing?
Sure. So I think the first thing is understanding exactly what type of financing they want to get. And the way I tend to explain it to business owners when I'm speaking is you want to think about it like the same way you think of a fast food place. So let's use an example of Dunkin' Donuts. When you come into Dunkin' Donuts, you generally want coffee or you want donuts. You don't walk in there saying, let me have a cheeseburger or let me have a chicken sandwich. And you figured out, whether it be through research, whether it be through trial and error, how to walk into Dunkin' Donuts and what you're going to order. And what they need to understand, the small business owner needs to understand, is applying for financing or getting financing is exactly the same thing. And so when you're walking into a bank, they might sell donuts and coffee, or they might sell cheeseburgers. And the first thing you need to find out is, what did they do? And so let's break that down just a little bit. That's loan sizes, that's type of loans, and that's asset classes. So some banks are going to say, listen, we cater to a smaller type of customer. We're going to want your deposit accounts, your savings accounts, your merchant services, and different things like that. Some banks are going to say, we don't even do this type of lending. And in banking, that's called C&I lending, commercial and industrial. To a small business owner, it just means working capital, debt consolidation, business acquisition, or expansion capital. They might just do commercial real estate. So you walk into that bank and you ask them for a working capital loan, they only do commercial real estate. That's the equivalent of walking in a Dunkin' Donuts saying, I want a cheeseburger.
Wow.
And so that's one of the things I would hope that the small business owner learns. Naturally, being the CEO of Lendistry, I'd also like to encourage them to take a look at us. We know when a client is bankable, and we know when to send them to which bank to send them to, and when they should go to a bank, and when a bank's financing is going to be better than ours. We have 29 bank partners who finance us so that we can finance those that they can't serve. And they're doing that mainly out of their regulatory requirements, but that's why Lendistry was built, to help the small business owner, because we recognize that in a continuum of capital, there were some challenges.
I want to ask you,
Sure.
when did you start Lendistry? And you're a visionary, I know that. So when did you start Lendistry, and why did you start? Is it for the deficiencies that you're seeing in the larger banks?
Yeah, so I would say, first of all, to answer your question, we started it 5 years ago.
Okay.
And what we saw was, so my unit at Wells Fargo was called North Orange County Markets. We did about $500 million or so per year in terms of origination and funding. What was interesting, and what I learned, was that we were also purchasing, syndicating, and buying loans from the community banks, those same 11,000 that I mentioned to you before. And we were doing that at a rate of $1 billion a week. And so using basic economics, I knew that if the community banks started to go away, which the writing was on the wall in 2008, that meant the supplier of the loans was going to go away, but the demand was going to remain the same. And so we created Lendistry because we wanted to help fill the demand. The back of the envelope business plan was, we're going to do the loans and sell them to Wells Fargo. That morphed or evolved into me really having a better understanding of, the market, and really seeing the vacuum, and really seeing that there were loan sizes that the banks were starting to call inefficient or not operationally efficient. And I saw a huge opportunity for us to really jump into the market and say, okay, this loan size, which, a couple of years ago, we would say things like, it's hard to get a loan under 500,000. Now we're saying it's hard to get a loan under $1 million. I believe in a couple of years, it's going to be hard to get a loan under $5 million. And so Lendistry is there to help fill that void. We've already gotten calls from top 10 banks saying, we don't want to do loans under $5 million. Would you guys be interested in helping us fill this pocket? And so I think that there's a huge opportunity for Lendistry to just come in and basically be a new version of a bank, but we don't take deposits. So we'd be a different type of bank. We'd just be the lending side. Mm-hmm. But I think that's our huge opportunity in the market space.
So they keep their deposits at Wells Fargo, for example, but get the loan through you possibly?
That's exactly right.
What about, when you said types of loans, what about equipment loans versus real estate loans versus just working capital loans? How does that all work with Lendistry?
Yeah, so thanks for asking. We have 7 different products. Term loans and lines of credit are at what I would call the top. And then we break it down by different asset classes. So we do have loans that basically meet 4 basic needs, which are business acquisition, debt consolidation, expansion, and working capital. And then on the other side of the house, we have commercial real estate loans. And all of this has been driven by the client dictating to us, we need this, we're not able to get this. And our client initially were the banks, where the banks are saying, this is what we cannot provide to our deposit holders. We need you to fill this void. Now we're paying more attention to the customers, and the customers are saying, look, I need almost an old school community banking method, which is, you've got all my documents. Why can't you give me this type of loan? And we've said, well, let's go figure it out, and let's figure out how to do this. And that's what we've been able to do at Lendistry. And so since that time, we've become SBA lenders, which allows us to do SBA loans. We become Federal Home Loan Bank, members of Federal Home Loan Bank, which allows us to do commercial real estate loans. And what I see in our future is we'll become HUD certified, so that's FHA and VA and some of the other products that we would need.
You talked about some of the differentiators of Lendistry versus some of the bigger institutions. What would you say is the key differentiator of Lendistry versus the others?
Yeah, I would say 2 things. I would say the first thing is speed. Generally, we're much faster. Our fastest product can be done in 15 days or less. And we still have a long way to go to compete with some of the online lenders and payday lenders out there. But we've got an unofficial mission to fight against the payday lenders. And the second thing is being able to be flexible in credit, right? Knowing that people have either made mistakes or things have happened, but understanding that there's a path for them to get back on track, or they've already gotten back on track. And we don't need to wait, 5 to 7 years for them to prove that they've been able to accomplish their goals and recover from that blip.
Well, 15 days or less. I know a commercial client of mine, it took them 120 days to get their commercial loan approved. And I won't say what big bank it was, but I think you know.
Yeah. And a lot of that just has to do with systems and redundancy. So 2.5 years ago, we spent money on technology. We saw the writing on the wall. We saw that the fintech guys had some really good things going on, and we respected that. And we said, well, we've got to become a tech company. We've got to change this. Loans could be our products, and we can leverage all of our basic knowledge and background knowledge and banking and things like that. But we got to become more tech enabled and become a tech company. And so we made that shift about 2.5 years ago.
Wow. Now, we talked about some of the changes happening 5 years down the road. How is Lendistry positioned to adopt some of those changes that are going to happen over the next 5 years?
Yeah, so I think we're in a good position mainly because, again, we still focus on the banks and helping the banks out. I need to be clear that it's not that the banks don't want to do the loans. They're just in a very uncomfortable situation, which I would call a conundrum from a regulatory standpoint, mixed with just basic life, right? It's hard to get an individual to work on a loan that's $100,000 versus $1 million, right? So let's just take a regular salesperson. They've got 2 loans on their desk. They've got an hour before they've got to get to their kid's soccer game. Which one are they going to work on? They're probably going to work on the one that gives them the highest commission. And there's nothing wrong with that. That's just real talk, and that's the way it goes, right? And so they're going to work on the $1 million loan over 100,000. And I think that's the thing that Lendistry has really thought about. We've thought about having 2 processes. We've thought about there needs to be one that's a little bit more tangible, a little bit more hands-on, and then one that's a little bit more automated. And what does that mean to the customer? That means that, any type of customer can come to us. We can figure out how to do things in a systematic and process way to move them quickly through our system. But there are loans that you don't need to look at all the details. You just need to flush it through and you need to move on. And there are loans where you need to have a little bit more hand-holding. The ultimate thing that happens at the end of that is that your people are not bogged down. So now that guy who wanted to get to the soccer game could literally do both.
Let's talk about the client experience. I need a loan. I look up Lendistry. I call in or email and, contact us. What's the client experience like? What's the process?
So what we do is we say, whether it's online or you're talking to somebody on the phone, we're going to ask for something called minimum required documents. And what that typically looks like for a non-startup is 2 years of business tax returns, 2 years of personal tax returns, 3 months of business bank statements, and an application. From that, we should be able to get enough details to tell you whether or not you can move forward. And depending on the type of loan that you're doing, we'll then ask you for more additional documentation if needed, and we'll move you through the process. Again, we have an application, 1 year business tax returns and 1 year personal tax returns, all the way up to SBA, which requires 3 years.
I think one of the things that small business owners don't realize is that if you don't have all the documents or all the stuff you need, you can't. That slows down the process.
It does.
When you said you could do it in 15 days,
it does.
If you don't have everything, you can't do it in 15 days. It's kind of the ball's in their court in a lot of ways.
Yeah, there's nothing we can do about a customer not having their stuff together. Right. But what we have tried our best to do is we have a nonprofit sister company called The Center. It's run by Constance Anderson. And what we've done is we've basically laid out a process where they could go to our nonprofit and our nonprofit can help them. So on our startups who have a little bit more trouble preparing pro formas and preparing business plans, they could get that type of help. Or, our more mature businesses, sometimes the CPA is out of the country for a month or something like that. We can get in there, we can help them work out and get us enough information so we can move forward.
You gave me a lot. You talked about a lot of different things. Is there any key information you want to leave us with before we sign off?
I would say small businesses run America. We all know that. And I think the key things I would just stress to the small business owner is they're very focused on not only knowing your widgets, but at least having the resources. I don't think anyone needs to become a financial expert. You just need to know where to find the expertise. And I'd also like you to know the Lendistry is here for you, whether we do the loan for you or whether we tell you to go somewhere which might be better suited for you. We're here to help you out.
Well, thanks for being with us, Everett. I know you got a busy schedule. It was hard for me just to get you even on the line to talk to us. If you want to get hold of Everett, please contact me at eb@wait-what.biz, or you can call me at 714-643-2500, and I'm at extension 420. Thanks for being with us, Everett.
Thank you. Appreciate it, Eric.
All right. Bye-bye.